Hey gang, check it out. Welcome back to Breaking Bread with Traders. And for those of you who don't know, I'm your host Mood Bro G. I hail from the land of the free state of mind. And in today's video, I just want to share with you a trading strategy that I've been using for a couple of weeks now. It's very profitable and very effective, and I think it's worth sharing. So before we get into today's video, please do us a solid by hitting that subscribe button and the notification bell so that you are notified every time we put out a new video. And with that being said, please give this video a thumbs up if you find this strategy helpful. And please do leave us a comment. It does really help the channel along the way. So yeah, man, without wasting any time, let's get into it. So for this strategy, we're mainly going to focus on the hourly time frame. So let me get a forex pair here. Maybe we can look at GBP USD because I traded this today using the very same strategy. So I think this can be a great example, right? So the first thing that we look at is the trend, right? If you zoom out, you will see that GBP USD is very much bullish, right? But we don't care about that. We just want to focus on the current leg. What are you seeing on the current leg, right? And we can see that this leg is bullish, right? Even if maybe you were to zoom in, you can see that we are very much bullish, right? So make sure that on the hourly time frame, if you're looking to buy, the trend is bullish, and if you're looking to sell, make sure that the leg is bearish, right? So that's the first step, you know, that's the first rule that you have to follow. And then after that, we're gonna move down to a lower time frame. Maybe you can use M12 or M10 or M5, it really depends. But me, I prefer M12, so if we are using MetaTrader 5, you will be able to add these custom timeframes because on MT4, I believe they don't offer M12. But yeah, man, as long as it's a lower time frame between M5, M10, and M12 and M15, I think you're good to go. So after that, we have spotted our uptrend. Remember, we're looking to buy, right? So after that, what we want to see is that we want the market to start moving in an opposite direction, which is the downtrend. And as you can see here, price was moving in the opposite direction to what we want to do, which is to buy, right? So we're gonna wait for price. As you can see, this is the opening of it was on Wednesday, right? So it was the opening of the GBP USD, and right here it was the close of GBP USD. So what you want to do is that you want to see price move to the opposite direction of the market, and then you really want to check the the closing high and closing low. So for that day, this was the high of that day, and this was the low for that day, right? It's very important that you spot out these. And although we're not gonna trade this, but it's very important because it's gonna make it easier for you to execute this strategy, right? So when we look here, you can see that this level here was the closing, the most recent closing high for that day, you know. So basically you have to wait for the market to close that day. It has to close. You don't take any trade on this day. You can take a trade uh, on the next day or the following days, as long as all rules are met, right? Okay, so as you can see here, this was the close of that day. I mean, the closing high of that day, and this was the closing low of that day. And when we look left, we can clearly see that if we were to put a horizontal line, we can see that this closing low here does not break structure to the downside, right? It does not. It fails to do that, right? So take note of that, um, because you'll be seeing that a lot in this strategy, and it's gonna help you master the strategy, right? So yeah, this is the opening of the next day, which was Thursday, and this was the close of that day. So we the day was also bearish because, as you can see here, we closed below the opening of that day. But we're not going to focus on that. We're just going to focus on the next day. We want to see price break structure and close above the previous high towards the closing, which is this here. This is the previous high towards the closing. I'm not going to count this one. I'm going to count this one because I can clearly see that um, this was a low and price did break this low. However, price failed to break this low of that day, right? Okay, so I'm not going to take this into consideration, as we can see that uh, price open there. So I'm not really convinced that price really wanted to do that, because a lot of times when the market opens and because the market opens and closes for like an hour, every day, I don't know, maybe in your country they close for a little longer, but in my country it's mostly an hour. In some countries it's 2 hours. And I'm not talking about like really closing. I'm talking about like the spread is gonna be too big for you to trade, and it does not make sense for you to execute trades at that time, right? Cool. So I'm not convinced. So the next day, uh, the market kept pushing to the downside, and then eventually we broke and closed above this structure here around this level, right? So I'm just gonna move my trend line, and you can see that we closed above that level, right? So now I want price to push down somewhere close to the Tokyo low, right? Remember, we have the most popular sessions. We have the Tokyo session, we have the London session, and we also have the New York session, right? So there's an indicator that makes it easier for those of you who struggle to pinpoint these trading sessions. But for me, I already know. I'm in South Africa. The Tokyo session here starts at 1 a.m. in the morning, and the London session starts at 10 a.m. in the morning, and the New York session starts at 2 p.m. in the afternoon, right? So I know these by heart. I don't need any indicator. I just want to put it out there. But there's an indicator that can make it easier for you, and I will also link it in down the description so you can check it out. So the indicator is called FXSSI trading sessions, right? So basically you just hold in the indicator there and you allow the DLL, and then you click OK, right? So what this indicator is going to show is the clear visual representation of the trading sessions. As you can see here, I don't know if you can see. Let me try to like zoom in because I know the camera might be a bit further. So as you can see here, we have the Tokyo session, we have the London session overlapping with the New York session, right? So yeah, basically that's it. That's it. So back to what I was trying to say. Um, Firstly, let me go back to the rules first, right? Firstly, you have to open your chart on an hourly time frame, and you want to check the current leg on the hourly time frame. If it's bullish, you want to buy. If it's bearish, then you look for sellers, right? After that, you go on a lower time frame, can be between M5 and M15, right? And then after that, you want to see the market close for that day. You're not taking any trades that day. You're gonna take trades the following day or the day after that, right? So after you see that the market has closed for that day, you want to spot the recent high towards the close, which was this one, right? And as you can see here, the market closed, and then the next day, price did break above that close. So the following step is we want price to close above that recent high towards the closing when we are buying, right? And once price does that, we want to uh, weigh in this indicator, right? But if you know how to spot these trading sessions with a naked eye, you don't need this indicator. But for those of you who need this indicator, I'm going to share the indicator with you. It's free, it's not for sale, and most things are for sale actually, you know. You just have to do a little bit of digging, you know. So for those of you who like to buy indicators from these so-called forex gurus who say they are coders and they developed something, you guys should be careful, eh? But I'm not there. I'm here. I'm not about that negative energy. However, I just wanted to put it out there that this indicator is definitely free, you know, and it's very useful, you know. Okay. So after that, we want to execute right. Angere, price pushed and closed above this level. Now we want price to get back to within the Tokyo um, range, right? Or the Tokyo session, right? So this here, the next day, as we can see, we have Tokyo high and we also have a Tokyo low, right? We want price to come closer to Tokyo low, right? It's either price is gonna come closer to Tokyo low or it's gonna go a little below the Tokyo low, right? Because remember, the Tokyo session is one that provides the most liquidity, right? So usually price will either break those Tokyo highs or lows just to grab the liquidity and then move in its initial direction, right? So the reason why I'm saying you must focus on executing your trades close to the Tokyo low if you are buying, it's because of there's liquidity lying somewhere around, right? As you can see, there is liquidity here, there is liquidity here, there is liquidity here, and here with these wicks, right? So you want price to come closer to that level so that you can execute. So as you can see here, this was the Tokyo low, and we also want to weigh in our Fibonacci tool so that it helps us to easily spot this level. You know, the tool is not really that significant, but it makes it easier for us to spot that level, right? And we can also use the rectangle tool, although it's not that important as well. And we want price to come down to these levels, right? As you can see here, let me remove the yellow rectangle tool because now it's gonna make a mess here. So as you can see, this was the Tokyo low, this was our zone of interest, and price did break this Tokyo low. As you can see with this wick here, price broke it, right? So this is probably the best place to like execute a position. Obviously, sometimes not always price will come to this zone or close below uh the Tokyo low or break the Tokyo low. Sometimes price maybe will reverse just above, a little bit above the zone, right? So you really gotta be careful and watch out for those. Sometimes fear of missing out will get to you, right? But as long as price is close to the Tokyo low, I think it's safe to execute, right? It's pretty much safe to execute, right? Because even if we were to expand our zone like this, and let's say maybe we got in here, um, price still went in our direction. Yeah, maybe we might be in a little bit of drawdown. Drawdown is part of the game, right? We are not chasing sniper entries here. You know, we just want consistency, right? So as you can see, guys, price did come to this level and then it pushed to the upside, right? So yeah, um, going back to the rules, you check on the hourly time frame the trend. After that, you go on a lower time frame. You spot, you wait for price to the data for that day to close so that you can easily spot your closing high or low, right? So if you are buying, you want to spot your closing high, which was this one here, and the next day you want price to convince you and break and close above this previous day closing high. And once it does that, you're convinced that price wants to really push further to the upside, and then you're gonna wait for price to come down to the 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 the, the, the Tokyo low, like between around that uh Tokyo low, right? That within that range, right? That zone, right? Sometimes it won't be as accurate, sometimes it will be it won't get to that level, to that exact level, but if price is closer to that level, I think it's safe to execute, right? And the way you manage your position is entirely up to you, right? So maybe let's try and look at another pair, see if we can find the very same entry criteria that we used here. But if you followed all the steps using this the strategy, then you would have made bank, no doubt, as you can see, right? So let's say maybe um you want to like trade live market, because I'm not here to share with you back testing how back test how I was able to back test this strategy and whatnot. Nah, I'm gonna teach you how to like trade in real time, right? So for example here, as we can see, the market closed above there. We want price, um the let's say when market opens on Monday and the market is very bearish, we want price to really close bearish, right? And it must be a significant bearish move like this one, because remember the trend, the current leg is still pushing to the upside. So this market still wants to move to the upside, but we need to be convinced first. We need to see some sort of um what do they call it? I forgot the term, man. But we need to see market reverse, you know. I will get that term. I'll remember it, man. You know. Damn, I hate losing, eh? I hate not remembering things. But anyway, let's move on. So we want when the market when market opens on Monday or Tuesday or Wednesday, we just want to see the market to be very bearish, you know, and then that will be our previous day. And then the next day, we want to obviously highlight those that high towards the closing, and then we want to wait for price to close above that high, and then we spot our Tokyo session, and then we want price to come closer to the Tokyo session, and then we execute. It is that straightforward, right? So maybe let's check a different pair. Let me drink some water, man. Yeah, I have flu, guys. I'm sure you guys can probably tell from the sound of my voice, you know. I was actually not supposed to make this video, but because I love you guys and I promised to put out more content, I'm forced to do this, you know. But it's all love, guys. It's not a big deal. I just want to share some valuable content with you guys. And please, guys, make sure that you like, you subscribe, you know, you share with fellow traders because I'm not selling this, so don't keep it all to yourself, you know. We just want to make the trading industry better for everyone, you know. So please do share this, do subscribe, do comment, do like. You know, I like the engagement because it really shows that you guys are getting value out of this, and it also motivates me to keep doing this. So yeah, really, I highly appreciate you for guys can do that for your boy, you know. Hey gang.